next mistake I see business owners make is they're not recording things that happen outside of their banking feed. So let's think about some examples. You go lease equipment for your business and it's zero down. So now the business has a liability of that lease, and it also has an asset of that equipment. Or you go purchase a car in a similar way, you have a liability of that car loan and the asset of the car. But none of this ever hits your banking feed. This is all happening outside of your bank account. But you still need to recognize these assets for the business for a lot of different reasons. They can be depreciated. It's correct bookkeeping. There's special tax circumstances where you can bonus depreciate a portion of those assets if you choose to do that with your CPA. So you want to make sure that you're recording these correctly. Just because they don't come in to your checking or savings or your credit card does not mean that they do not belong in your business book. So let's look at how to do this. You're going to go to New, and you are going to select journal entry. Now, when you make a journal entry, there's a few things that I want you to know. And this is another instance where I feel like I could just make an entire video on journal entries, but we will keep it brief for the purposes of this tutorial. You want to make sure that the journal date, and it defaults to today automatically. You want to make sure that that date is when it happened. So if you purchased a car on the 18th of January, make it the 18th of January so that it is correct in your books, especially if it was in a previous year. You don't want it to default to the wrong year. So go ahead and select that journal entry date. Now you are going to pick the account. So just like when you were categorizing transactions, you select an account. So this might be an automobile account. So this might be, let's say you took out a loan for Chevy truck. So this is a loan for your Chevy truck. That's obviously not going to be a category in QuickBooks. That's like very specific, but I like to make things pretty specific in my book. So this is going to be a long-term liability. Anything that you owe over a year is considered a long-term liability. And this is going to be a note payable. So this is a loan, spelled that wrong here, for Chevy truck. And I would go ahead and hit save and close. So when I did that, I would then go ahead and make a second account for the asset of the Chevy truck. So I would go ahead here and I would put Chevy truck. I would make that an asset. I'll just show you how to do it right here. It'll probably be easier to see it. So I'll go here, Chevy truck. And the reason why I like to name them by the truck brand is your business might grow faster than you expect, and you have multiple vehicles, multiple types of equipment, and you want to make sure that you know where to categorize it. So you're going to hit add new Chevy truck. And then this right here is going to be an asset to the business. This is a fixed asset to the business. And you'll see here, vehicle is an option in QuickBooks. So you'll say vehicle, this is my Chevy truck. And then you can select to track this depreciation if you would like to. That's something you need to go through with your CPA. We'll go ahead and hit save and close. And you are going to record, and this trips people up a lot too. You are going to record a debit on the asset, so $30,000. Let's say that's how much the car was, and a credit of $30,000 here. So here is your loan. It's sitting as a credit. You would put here Chevy. You'd put here whoever the lender was, whoever took the loan. This could be Chevy. And then you are going to hit, well, before you actually hit that, I would always go in here to your attachments. I would scan every single document that had to do with that sale that you got from the car dealership, and I would attach it here so that your CPA had it, and that would help you determine how you were going to depreciate it. But then you would have everything that you needed for that car and the loan attached in QuickBooks. Very important to make sure that you are keeping that data. And then we are going to go ahead and hit save and close. So now let's go look at where this ended up. And again, I didn't put the name. That is something I would also absolutely do, but for the sake of your time in this tutorial, I did not put that in. So we hit save and close, and now we're going to go look at this in the balance sheet. Remember, the balance sheet is showing our assets, liability, and equity. So we go into our reports. We are going to look at the balance sheet. Now we are in the balance sheet, and you'll see here the Chevy truck. So you'll see here they actually had, and again, these aren't my books, this is dummy data, a truck here, and they just had original cost and put this in here. But so if, let's say there were 2 trucks, I would want these together. So both of them would be under truck. So I would have a category called vehicles or trucks, and then both of these trucks would be under that fixed asset. But since we did not know that they already had a truck here, this got recorded. But if you only had 1 card, this would be the proper way to record it, how we did it in the journal entry. And then we have here, we have the long-term liability, the loan for the Chevy truck right here. So that is how you record things that are happening outside of your book. So if you need to make a journal entry, again, you're just simply going to hit new, you're going to go to journal entry, and you're going to record what happened outside of your books so that everything that your business owns is categorized correctly.